Hey, Simon.
Jim, how you doing?
Good. It's been a while. What's been like a couple weeks?
Something like that. But I'm excited. We're heading into the back few months of the year. It's an exciting time.
Yeah, Black Friday, Cyber Monday will have come and gone by the time this episode airs. So
It
the
will.
BFCM.
Yeah, I made some good Black Friday purchases.
Yes,
Yeah,
I
yeah.
haven't made any yet, so I don't know.
No,
But
no. I bought the Anchor mystery pack where they send you a mystery charger. It could be a giant thing that's worth like $700, or it could be a cable. But it was $20, and I was like, that is exactly what I want to be doing. So more mystery gifts. More
my
brands need to do that.
my kids, we watch connected TVs, and
Yeah,
the commercials on connected TVs are always different than like standard like broadcast TV.
sure.
And Anchor is all they must think. They're targeting my IP address, right?
You're a
Because I'm
cable
a tech
guy.
guy, and
Yeah,
so it's just constant Anchor commercials, and my
yeah.
kids hate it. It has this like this jingle, this song, and my kids are like, "Oh no, turn it off!" It's so funny. Um,
I mean, look, there are worse commercials. You could be getting all these kind of like prescription drug commercials all the time.
that's
Those are
true.
the worst ones.
We get those too, so
Yeah,
they're listening in on us. But
yeah,
no, Simon, it's no secret
yeah.
that we were talking about BFCM. That's one of my
Oh
favorite
yeah,
acronyms. It's
oh
no
yeah.
secret that I, along with many marketers and analytics professionals, love a good acronym like BFCM. Right? We have so many good ones
Yeah,
out there. We have MMM, we have MTA, GA, and GTM, which is pulling double duty with Google Tag Manager and Go to Market.
absolutely.
ROI, CPC. I could go on forever. TBH.
YMCA, all the good ones.
Exactly. But the acronym we're going to be diving in today is PE. I know you're going to ask, Simon, Jim, what does physical education have to do with marketing measurement?
Yeah, what does it?
Well, I'm sure we could find a good way to relate those two things, but actually, that's not the PE I'm referring to. I'm
Oh,
talking about private equity.
okay.
So, private equity, as we'll get into, involves investment firms investing money and other resources into companies to help them grow and eventually sell for a tidy profit. And of course, one way that companies can grow is through marketing. So, PE firms have a vested interest in helping companies execute and measure their marketing to the best of their abilities. Fortunately, we're joined today by someone who has a front row seat at the crossroads of private equity and growth marketing. Mark Fiske has more than 15 years of experience in marketing and digital transformation. As vice president of global marketing at Ancestry, he led the teams responsible for global customer acquisition and retention. Then he moved on to Credit Karma as the vice president of growth and marketing. But for the past 5 years, almost 5 years, not quite, he's been an operating partner at H.I.G Capital, a global private equity investment firm with 59 billion with a B of equity capital under management. In his role there, he works with the firm's portfolio companies to help develop and build comprehensive marketing and digital strategies. With all that said, welcome to the Measure Up podcast, Mark.
Woo!
Thanks for having me. I'm really looking forward to our conversation today.
Absolutely. And the main theme for the episode today is marketing measurement from a perspective of private equity, right? So kind of it's a little bit different than consulting side or in-house side. I think you have a unique perspective on that. But before we dive into that, if you could just tell us a little bit about how you got to where you are today, because I think that's an interesting series of steps that led you to where you are, and then about the work that you're doing at HIG.
Yeah, it's a good question. I think, when you look at anyone's career, I think they talk about it as like a jungle gym. Like it's very rarely like I'm going from this level to this level to this level, and I'm in the same role function area. And, I had been at a variety of like growth stage brands, trying to call it Series C, and rapidly growing them from 100 million to 5, 6, 700 million, $1 billion. And it's a lot of work. You're building growth motions, you're building out teams, you're doing the infrastructure work and the processes and tooling. I came to a point in my career at Credit Karma where I was like, oh boy, okay, it's been a few years here. What's next? And I was like, I can keep doing the same playbook again and again and again and building up these growth teams and joining these companies, or I can, try to figure out like what can I do to get me the variety where after call it 3, 4, 5 years in a role, you're not bored. You don't wake up and know how your day's gonna, kind of uh, play out. And it just so happened that this opportunity kind of like fell into my lap, and I saw it and I immediately was like, wow, no, this seems like a really great way to learn and grow with businesses, but to get that variety where you feel like you can, you wake up every day and have something a little bit different. And that's certainly true. I'm now, as you said, almost 5 years in, just hopped off a call on BFCM planning. And, right after this, it's going to be go to market for a B2B company. So, that variety is really exciting and interesting. Honestly, on a day-to-day basis, though, it really just, my role entails, figuring out ways we can help our portfolio companies grow and scale, help them troubleshoot, and just really make sure that they've got the resources they need to ultimately be successful, especially in times like these where there's belt tightening in B2B in particular. And then in consumer side, everyone right now is just, heads down talking about, what is our Black Friday plan, what's our contingency plan, and what's the contingency plan for the contingency plan. So really helping them work through that.
Plans on plans. Yeah. Sorry, Jim, you go.
Plan A, plan B, plan C.
Yeah, absolutely.
I was just going to say, It sounds like your role right now feels a lot like a consultancy role, like you're working at an agency or a consultancy, kind of providing advice and guidance, but with the benefit of not having to go and find clients, right? Your clients are built in.
Yeah. And I think the other difference is I feel like for a consultant to continue to get business, they have to always be the smartest person in the room. And I like sometimes being the dumbest person in the room. It gives me permission to ask obvious questions that sometimes drive unlocks and sometimes, just help to further educate myself. But I do think like not having that business development component of consulting is huge, especially when you're like independent consultants. I have a lot of friends in that space that do really great work, but they're candid. Like they're like, hey, I'm spending a third to half my time just on like content generation, all of the different component pieces to make sure that I've got that funnel, that inbound, consistently happening.
Interesting. Well, so I mean, PE, private equity, is it's a word that gets thrown around a lot in the media. I've listened to a lot of different podcasts, and transparently, in my background, I've been part of now 2 companies that have been PE backed, and so I've gone through the cycle. I'm going through another cycle right now, so I've got a decent handle on it. But for those folks listening who just they hear PE, they hear VC, neither of those two really stand out. Like there's any differentiator between them. What is the difference between those two?
Yeah, so I'm going to use my favorite phrase, and I feel like every marketer's favorite phrase, like it depends.
Okay.
So there's a lot of nuance, but I will say in general, and I'll speak in generalities, I feel like venture is more about investing in ideas in categories or maybe even in a specific founder, where the businesses are often super early stage. I have friends that are venture backed, and I'm like, "What's your product?" They're like, "Well, we haven't quite figured out what the product's going to be yet." Like they're getting a backing around because they've got an idea around AI, and they're part of a venture investor who's placing bets. And I think only when you're a venture investor and you might have a company that you're investing at very early and might be $100 billion company down the road, you can place a lot of bets, and you only need a handful of them really to succeed to reach your investment goals. In PE, it's very different. Generally, there's product market, there's a product, the business model is proven. In growth equity, which is where I spend a lot of my time, it's more like, hey, we've got the business model and all that proven, but we might need additional resources to help accelerate that growth. And that can be anything from, can we have capital to build a distribution network? We need to accelerate marketing. We need to build out new product lines. But PE tends to generally focus less on that, like we're shooting for the 5% of companies that pay back the whole fund, and instead, almost every portfolio company we aim to get some type of return out of. It won't be, that maybe 5,000x return that you would get from like funding a several $100 billion company in the early days, but it'll still be on average very very compelling. I also think because PE is a little bit more focused in where we invest, a venture fund might write hundreds of checks a year. We're generally focused on where we can add value. So you'll see private equity tend, and I'm sure you've seen this, Simon, in your experience, tend to be a little bit more hands-on and how they help and partner with companies, whereas venture investors, a lot of times they'll be like, hey, great, yeah, we've got a marketing team. they're kind of more for like marketing the firm itself than to help the portfolio companies. And
Mm,
we'll see at the next board meeting kind of thing. Whereas,
sure.
I'm interacting with portfolio companies on a weekly, if not more frequent basis.
Yeah. So I guess maybe to sum it up, it sounds like it comes down ultimately to degrees of risk tolerance and essentially how far into the future you're willing to bet on something, right? If you're like, hey, this one's got a 50-50 shot of succeeding, sounds like it's going to be a PE deal. This one's got a 1 in 100 shot of succeeding, sounds like it'll probably be VC, but you'll make 100 bets and one of them will pay off.
Yeah,
Or is it,
that, and then like how involved you actually can get in terms
Right.
of that
Right.
value creation.
Right.
Yeah.
Right.
yeah, is it
Smaller
even safe to
pool. Yeah.
say that like for private equity, that all of the companies that you invest in are already either profitable or have a very clear path to profitability? So it's really like more about saying, okay, our bet isn't that this company is going to be a huge success, but our bet is that we can grow this by a certain magnitude.
Yeah. It honestly generally is yes, but there will be fun firms out there, PE firms that look for like distressed companies that are unprofitable, and they think they
Mm.
can figure out how to make them profitable.
Mhm.
But generally PE is coming in with a thesis around how do we help this company get to a better place.
Awesome. And what kind of are there specific? Is there a specific industry or thesis that HIG has, like the types of companies that you invest in, or is it like a specific industry or vertical, or is it like all B2B or SaaS, or is it just kind of a lot of different things?
Yeah, it's HIG as a whole, we're larger, we're multi strategy, so we have a variety of different what I call fund strategies, and some say, hey, we only invest in really healthy, rapidly growing businesses where we can somewhat hands off. Some are saying like, hey, we're going to have a strategy where we go and we find a bunch of resources to bring to bear to help you grow into new markets, things like that. And then we have our growth fund, which is actually where I started at HIG before I went a little bit broader, and we've really focused on those companies that are growing really rapidly, maybe 50+% a year, but they just need the capital to kind of help accelerate that growth. And I would say where the common theme across all of it is we look to things where we can kind of use the resources by virtue of our scale. We call the power of the platform, to really help those companies and leverage the network that we've built up over the years of it's been what 30 years as a firm. So when someone says, "Hey, I need," I'm just gonna make this up, but like FedEx rate negotiation, so I can make sure that we're optimized in that zone. We're like, oh, great. Here's the person or the firm or
Mm.
the resource. And by the way, we've got the benchmarks because we've been doing this for so long to help make sure
Exactly.
that you're as effective as possible at that.
Yeah.
Right. You have the data from all of the dozens or hundreds of companies that you've worked with. Like, here's our benchmark. Here's what you should be paying. Here's the rates. If you're better than that, you're good. If you're paying more than that, we can help you negotiate down. Like, just having that
100%.
data is so valuable.
100%.
Yeah.
Yeah.
So, well, I love that we're touching on the background here, but I know our listeners, they're measurement enthusiasts. And I was having a chat with a friend of mine, Todd Bullivant, earlier today, who he works over at W. Merton, and I was chatting with him about what do you want to see on the pod? And he was basically telling me, I think we in the measurement space are very insular. We can be in this little bubble where we talk about media mix modeling, we talk about all these really advanced forms of measurement. And when you try and explain it to others on the outside, they sort of give you a little bit of a blank stare. And your role is one that where you really have to straddle both sides. And so as part of that, like this is sort of one of those maybe an outside of you, and that is what I think is going to be really interesting today. So I'd love to get a better pulse on just a better understanding what trends or patterns are you seeing in terms of the companies that you're working with and how they're approaching the measurement of their marketing.
Gotcha. Yeah. I think I'll take a step back a little bit because I think the trends have changed dramatically since iOS 14.5. I think
Mm,
there was this period where marketers got either spoiler lazy, you decide which one, and it really forced a lot of marketers or incentivized them to be really myopic in terms of how they thought about stuff. So they got very reliant on Facebook, and you see a lot of D2C brands just hit a wall after iOS 14.5 because they were just very dependent on I've got the Facebook and Google algos trained. I don't need to understand anything more
yeah,
holistically. Life is good.
I just feed the money
And
machine, and it gives
yeah.
me money back.
It
Yeah.
prints money.
exactly. And we saw them all these brands hit a wall in 2021. And I think that shift forced brands to really think about how do they blend probabilistic and deterministic methods. And I think
Mm.
we reintroduced the art to marketing. For years and years, it's kind of funny, like some of the practices of measurement. I was watching Mad Men recently, and I was like, this is still what we do today. Like, it actually hasn't changed. We just got complacent with digital algorithms and, last touch or MTA, and kind of forgot that there's other more advanced and sophisticated ways of doing things, or like or maybe an art to it. And now I think I'm seeing brands reintroduce art to measurement. So where, especially for brands that might not be enterprise level or have the resources to spend on advanced modeling, simple things like balancing post-purchase surveys in their attribution models, or recognizing that they're not going to get perfection. So let's blend platform reporting with an MTA, with post-purchase surveys, with design of experiment type tests, so they can kind of try to triangulate to what their performance is. And I think that's more the art that was lost over the last decade that we're now seeing increasingly, grow in popularity. I would say though, like as brands mature, I'm definitely seeing them get a lot more sophisticated. And what I love to see now is, it used to be if you couldn't afford a new star or like several $100,000 for a custom MMM, you're out of luck. Nowadays, you have a spate of new and emerging tools in the space that we can plug into brands and start to get a lot more sophisticated at what I'd call like the mid market, where
Mm.
before they might have been a little more limited.
So would you say all of your portcos at this point in time have essentially adopted at least a form of agile media mix modeling?
I wouldn't say all. I think it
Okay,
really depends. Like, I think when you look at a business, you have to understand like what drives a business. And there's a lot of businesses in a portfolio where you're like, I come into it and they're like, Mark, they need marketing support, blah blah blah, and I'm like, this
sure.
is this is an enterprise sales led thing. Like, I can help
Mm,
with air
sure.
cover marketing, but this will never be the driver of the business. You need to
Yeah.
make sure your sales team is great and your collateral's this way and that way. And attribution, and for those types of businesses, is really really tough. It's much more about sales force effectiveness than anything else. So I would say for consumer driven businesses, absolutely, Simon.
Hmm.
For B2B or businesses where marketing maybe isn't the critical lever, I think that's a little bit lower on the priority list.
I'm curious, maybe go slightly on into a tangential here with the enterprise, large enterprise sales companies. What do you see them using? Are there strategies, or is it kind of all across the board? Because yeah, I mean, if you have an account-based marketing program and it's a 12 to 18-month sales cycle, yeah, you're not going to be using MMM. It's just
Well,
not
Yeah.
going to
you
work.
might be using MMM, but for a constrained component of it, right? Like
Sure,
there
sure.
are elements to this.
Yeah, I mean, honestly, like the brands that I think do it best are balancing the art and the science. And they're saying, like, okay, I'm going to look at three lenses. I'm going to look at touched revenue. I'm going to look at first, and then I'm going to look at closed source, and I'm going to survey as we go. So, like at lead submit, I'm going to ask the customer, how did you first hear about us? When I get on that call with a salesperson, once they're qualified, it's going to get asked again. And then once it's closed, it's going to get asked again. But I'm also then going to look at the journey along the way and what was content consumption stuff, so we can actually make sure we assign value to content. There are newer tools out there that claim to help with this. I think Dream Data is probably the one that I hear about the most. I would say none of the tools I've seen are like, oh my God, you need to be using this ASAP. Instead, I think what's most important is that companies are asking the question at various stages in the process and then balancing their mix accordingly.
And do you have a struggle trying to educate the teams around probabilistic thinking? Because I know this is a challenge I've seen at a lot of companies, is that, for the past 10
Yeah.
years, Facebook ads gave us this ROAS number and it said it was this, it was 4.973. That's the number. And now we're saying, well, that was never really the number, right? Like,
Yeah,
I
I
think we're,
think,
yeah,
yeah, it's tough, and I think it is a big struggle, particularly for consumer brands. Like B2B never had that level of certainty. They might have had Google Ads, and they'd be like, yeah, obviously content doesn't work because everyone comes to us, and trade shows don't work because everyone comes to us through our brand keywords. And you're like, well,
Hmm.
how did that happen? Come on, like
Right. Yeah.
let's be honest with
Yeah.
ourselves. Consumer brands, I think it is a lot tougher, particularly when they're digital only. I think once they start having offline in their media mix, when they're doing out of home or radio or linear national television, things like that, they recognize like, yeah, we know this won't work, and therefore we need to, start introducing the art to the process.
Hmm.
But until that point, it is tough. And a lot of times, what I'll do is I'll just kind of like get the data points to demonstrate that their current attribution approach is just not accurate. And then once you kind of like blow it up, that gives you the permission maybe to like open up the dialogue around what are other ways we can approach this.
Cool. Yeah. Is it? Do you have a favorite way of showing them or blowing up their ideas of multi-touch attribution or their current whatever they're currently
Not
doing?
just,
Like,
yeah. He
or is
walks
it
in the
like?
E-
room and he's like, everything you know is wrong.
yeah,
Multi-touch demonstrating attribution is dead. Deal with it.
I never want to be the guy that just comes in and like rains on a parade. But what I will do is say like, hey, have you thought about, at least up until like some of the recent Google Analytics changes, like, look, why don't we do the model comparison tool and look at first versus last touch? Your last touch today, great. Let's actually look at first touch, and that'll actually show. What I like to do is like that's a diagnostic to say like what is your error range and what is the opportunity sizing here, because it's not last touch, it's not first touch, it's somewhere in the middle. But if you can prove that the spread between those two is of a certain size, I think that's like really impactful. And I would say, like, kind of on a similar note, like, great if you don't have that. If you're not at least doing like some type of post purchase survey, why don't you run that again and look at the delta? And
Mm.
then do the what do you have to believe? If you believe that this is 100% true, what does that mean in terms of like opportunity cost or wasted opportunity, and what does it mean in terms of like wasted spend also, frankly? And usually like
Hmm.
if the company is a consumer business spending a meaningful amount on media, it's a pretty sizable number that's pretty eye-opening, and forces them to like start really thinking about and asking the questions around like, okay, well, you know how do we get better, like what can we do to get more sophisticated here?
Right. I find what's particularly hard about that, though, is if you walk into a room and look, I've had some slides in the past where I basically put a picture of a graveyard and be like, look, it's your attribution model. And, taking that to sort of the fullest logical extent, there are times and places still in organizations where it makes sense to have or to utilize deterministic attribution data, especially when we think about media managers and the feedback loops that
Mm-hmm.
they're able to optimize on. That is a good use case. But the problem is, I think it's extrapolated and used at these executive levels. And so you really do need to maintain two lines of thought of two things being true at the same time, even if those two things are incongruent, because you have no other, there's different purposes here. One is to optimize the
Mm-hmm.
actual activity in the platform. The other one is to optimize your media investment. But you
Mm-hmm.
can't use the same model to do those. And I think that's where a lot of these brands struggle, is saying, well, if I can't use it across the board, then it can't be true. Do you find that is a challenge when you're working with these brands too?
I think it's a huge challenge because everyone, like, a lot of times you'll say, okay, well, what is your reporting that you're using for the company as a whole? And then how does that tie to what the operational channel managers are actually using? And in a lot of situations, operational channel managers might have an efficiency target set that should be profitable, but it's only looking at publisher reporting. Like Facebook says what I'm doing is right. And you're like, well, that's great, but um, that doesn't account for incrementality. It doesn't account for diminishing returns. It doesn't account for a lot of the things we need to think about here. And that's really,
Right.
really tough. I think the other part is like actually operationalizing this on a regular basis at a company level is really, really tough unless you've got a platform that can kind of automate it for you. I remember when I was back at the long ago at Ancestry, we had an MMM, and it was like once a quarter we would refresh the data. And it was like this, I don't even know how to explain like the tension in the room when the report would come out. Because this report would come out, and some channel managers would be like, holy cow, I'm 20% less efficient than I thought I was. And they would be really miffed because then the next quarter, the attribution model reset, and you start seeing their efficiency go down, and they have to like reset their targets and kind of build back. And like it's to be expected, right? Like they might have scaled their program 30, 40% that last quarter, like incrementality would, understandably go down.
Mm-hmm.
But
Mm-hmm.
it is really tough to operationalize. And then when it even comes to like board reporting, right? Like I finally had to put down a mandate to say like, hey, HIG professionals, like don't accept a board deck that's using Google Analytics data because I don't want to ask any more or answer any more questions around why we can't spend more in brand search. Like this is a solved problem. This we actually do have these attributed reports. Make
Yeah.
sure that they're using them and presenting them up so we can make like informed decisions. But it's tough because it's like a lot of change management and
Oh
it's
yeah.
uncomfortable.
Well, I mean, that is such a profoundly confident thing to ask, to say, no, no more Google Analytics data in these reports, because I do think that that is the lifeblood of a lot of organizations. And I imagine, especially at the point in time when when you start working with these brands, they've grown, they've had
Mhm.
some success historically, and they've said, well, this is what allowed us to get to this point in time. And now you're telling us we have to completely change everything that we're doing from a measurement point of view. And the reality is, I think one is, yes, they need to scale up as a company, and grow. But the second element is, to your earlier point, the entire environment has changed. And so it becomes this really interesting moment in time where you're probably getting these brands again that started pre iOS 14.5, that grew
Mhm.
up in that era, and now you're having to work with them to make that shift. I do wonder if the next generation of companies that you have that come through, the ones that maybe they've started during the pandemic, for instance, when you start to make investments in those types of companies as they mature a bit, if they will come in as essentially MMM natives, maybe. Is
Mhm.
that, are you starting to see any of that in the portcos that you're considering?
I wouldn't say MMM native. I would say design of experiment native because I think like when you think
Mm,
about some of these emerging brands, like
yeah.
they might not be at the scale. Like the biggest
Well,
challenge that I
exactly.
continue
Yeah.
to see with MMM is just data scarcity, right? It's the same challenge
Sure.
with B2B and why I think B2B attribution is so darn tough. Is like, you need data, you need data variability, you need data history at a certain volumes, and like, emerging brands and B2B off B2B at like call it mid-market to enterprise scale just don't lend themselves to that as much.
Yeah.
But I do think brands are getting a lot smarter at like lift experiments, controlled experiments. All of the platforms have kind of like natively built that functionality in now, and I am seeing like that generation of businesses and brands, really embrace it, and I think that's great because it allows for a level of discipline and understanding that wouldn't otherwise be available.
Yeah, and I
That's
feel
awesome.
like the tools are starting to move that way too, which I think to a certain extent the tools sort of drive the behaviors to an extent, right? Like,
Mm-hmm.
this is why we got so hooked on MTA, data driven attribution for the past decade, was because that's what Google Analytics gave us and it was free and it was great. And now, you're starting to see the tools like the Lift Labs and the Recasts and
Mm-hmm.
the houses all kind of starting to push this narrative of of probabilistic thinking, of testing, have a test
Mm-hmm.
and learn culture, have an experimentation culture. So yeah, hopefully, we can the tools will start pushing people in the right way.
Well,
I think
and everyone, sorry, you go, Mark.
Yeah, I was gonna say I think you're right, 100%. But also, like I think the more sophisticated brands and even the tools now are recognizing like this is an art, not a science. You're always going to be wrong. Your goal should be to be less wrong, and therefore we're going to use multiple methodologies. Like I think it was just a couple weeks ago that Rockerbox finally like rolled out their MMM product that had been in beta for a while. Measured has one now.
Hmm.
House plays nice with some of these other design of experiment driven type approaches in MMMs. Like everyone recognizes like I would say not everyone. I would say the intellectually honest companies out there in the measurement space recognize like it's not one or the other. It really needs to be an and so we can like get to a better, more holistic view.
What? Wait, sorry. Does Measured have an MMM? Is this new information?
I don't think it's new information. I think they've been playing nice with MMMs for a while now.
They've been playing nice. I
Yeah,
for whatever
sorry.
reason
Yeah.
I thought they were always trying to be MMM agnostic in the sense that, like, hey, we're your incrementality buddy. We'll handle the priors. But as soon as you start to get into any kind of because the challenge, of course, with MMMs in general is just like, are you just going to overfit a model to whatever you want to, whatever narrative you're trying to present, and make the case that we should just spend all the money on Facebook? And I don't know. I know, at least from the conversations I've had with their folks, they're always trying to be very agnostic to to any kind of I guess active measurement. Rather, they're trying to focus
Mhm.
on like, is there incrementality or not?
Yeah, I would say like this might just be me projecting a little bit onto measured. I've seen a marked difference in like the openness to it. It used to be like
Yeah,
design of experiment is the way to go. It's the only way, and like MMA has all these flaws, and now it's much more like the we see the value in these other approaches, and we're going to embrace them and help you balance them
yeah.
in your reporting. And I think that's a more mature or like intellectually honest approach.
Right. Well, I think that
Yeah.
that leans into the whole theme of today, which is just there is no one source of truth. And that
Hmm.
word, that language, source of truth, I think is toxic in our industry because it implies the existence of a God model or something that is the perfect way to measure everything. And to the point of the conversation we're having today is it's complicated, and all the most sophisticated brands you're working with understand that, and they look for diversified measures, and they think about things like post purchase surveys like you're saying. And I imagine when you talk about Mad Men earlier, I can't remember many of those episodes when they talk about measurement, but I imagine, I don't know, was it Don Draper sitting there drawing up an incrementality test, or but but they probably were talking about post purchase surveys, or just like understanding, like, do people even know about this brand? We put a billboard up, kind of, like, is that and sorry, was that what that was about, or was it? Did they have different methodology in that episode?
It's more just about like the methodology. Like they were doing market-based testing, like match market
Ah,
testing back in the 60s, right? And
yeah, of course.
like I think a lot of times we think we get a little I don't know, maybe a little arrogant or overconfident, or we love to embrace technology without failing, without realizing, like, hey,
Yeah.
no, like there are tried and true methods that, frankly, are still more applicable. Like, if you're a brand with a big offline media mix, like match market testing is still a really effective way to understand what your media is doing for you. And
Mm-hmm.
I think a lot of these digitally native brands had a really tough time when they realized when they hit the wall. They're like, we've
Yeah.
maxed out Facebook, we've maxed out Google, what's next? And then they got into these channels that were just like really tough to measure.
Yeah.
And they're like, we know this should work. We don't know why it's not. And it always comes back to measurement.
Yeah, and
Well,
in a sense, you're like you're describing kind of two things. One is like, okay, we're digitally native, we're D2C, we've maxed out these channels that we're really good at measuring, but now we've kind of we've hit that wall. We need to keep growing. So the way to grow is to shift from the short term to the long term, right? The whole,
Yeah.
Benet and Field, the long and the short of it, right? We need to start
Yep.
building our brand, which is inherently so much more difficult to measure. Like there are ways to do it where there's ongoing research, but like that's where like you're talking about like growing, as you grow and scale as a company, as you grow revenue, and then also like growing in terms of your measurement maturity and like thinking about,
Yeah.
well, we need to start investing more in brand and how are we going to measure that? So do you see sort of, let's see, how do I ask this question? What's the range that you would look at? So like, are you looking at companies that are around a million ARR and then they grow to 100 million, or what's sort of a range of, just to give like
Yeah.
I don't know
It's
if,
it's a
that's something you can.
wide range of businesses and frankly of brands as well. So like, on the very, very low end, maybe 10 million of ARR, but growing 50+% a year. But on the high end, we have brands at, five, six, $700 million plus top line as well. And the same thing with like, I like to say some businesses are stronger than the brands, and then some brands are stronger than businesses. We have some like really iconic legacy brands, at least in certain regions, like, we were investors. We still have a stake in Empire Today, which if you're from the Midwest, the jingle like 877 Empire, and like it's like stuck in your head. But like that's an example of like the brand has a perception. We need to make sure we're evolving it over time and making the right investments there. And I would say like honestly like what we started our conversation about is the easy part, like the brand measurement, the brand understanding, and that really long-term longitudinal. That's the really, really tough stuff, because even if you look at MMM, like the decay curves and all of that just don't lend itself really particularly well to that. And there's still a little bit of intestinal fortitude that you need to have when making those investments, recognizing they might not be as measurable as you'd like them to be, and they might take several years to really pay dividends.
Yeah, ad stock doesn't account for that long of a of an
No,
effect.
No.
it's a bummer. Like you can do these like whenever I have the discussion, people are like, what can I expect? I'm like, if you invest this much against this audience with a target, impression frequency of 7 impressions a month, which is like the minimum for recall, we hope we can improve your aided recall by 4 points in a year. And they're like, wait, that's it? And you're like, yeah, it takes time, it takes work. Like it's not easy, and ultimately your business and your product is like the best form of brand that you can have out there because that's going to create the word of mouth. It's going to create a lot of the other things that really helps you out long term.
Exactly. Yeah, you can't put everything on marketing to do everything.
As much as I'd
Yeah.
love to, no.
Well, as you are working with those brands, and they're going through these maturity phases. Obviously, the life cycle in PE is, um, I guess, on average around 5-6 years, and so these brands need to prepare to exit.
Mhm.
I think one of the interesting things is how are potential acquirers looking at? Are they even looking at marketing measurement in any capacity to understand? Because when they acquire a company, they want to see that there's something that they can grow here, or there's something that they can
Yeah.
fix, and they can find these efficiencies. Because you don't want to buy something that is already like the perfect company and like it's going to just steadily grow at 2% every year. You're like, that's you could do that, but you're going to be sitting on that investment for 30 years before you see a return, and that's not the PE model, right? The PE model has to be a lot more truncated. You want to see some growth in there. Um, are folks are acquirers looking at the measurement models that are in play?
Oh yeah, 100%. Like I would say like in due diligence is probably one of the first questions in like the sales and marketing section of like a questionnaire that one would see,
Interesting.
especially if it's a consumer business, especially if it's spending a lot of money on media, because like,
Yeah,
back to your point, they salivate at an opportunity if they think there might be waste, or the inverse, think that there might have been an underinvestment in marketing or
sure.
sales. They want to know it, and we're no different. Like my favorite questions to ask when I'm in a meeting with management around a prospective investment is like, hey, like, how'd you decide on your budget figures by channel? And then if you had like another 20%, how would you make the decision about where to put it? And the answers to those two questions are probably more informative than any deep dive into the actual attribution model because you really get to the understanding of
Yeah.
here's how we do attribution, here's how we do budget allocation. Do we have an understanding of diminishing marginal returns? Like all of those concepts kind of come up in those two questions and gives you a really good sense as to like maturity,
Yeah.
in their early days.
Yeah. Oh, well, at my previous company, we just did it, half and half. So that's what we did here. So
Yeah, or percentage of revenue, and we know our
Yeah.
customers use Google, and you're like, okay, cool, and then you're secretly salivating because you can partner with them and introduce them to some tools and really help grow them, and we've done that. Like we've had some businesses where we'll 10-20x their marketing spend and the business as a whole because we kind of cracked the nut that is like how to efficiently invest.
Wow. Yeah, no, that's well, one of the pieces of this too that I think was talked about for a while in the PE space was not just media mix modeling or the efficiency of your marketing investment, but I was also looking at the customer base and
mhm.
utilizing. I think for a while, Peter Fader's buy till you die predictive lifetime value model was really a bit of a darling of the space. Is that still the case? Does that matter to you?
Oh yeah, it really matters. I think there's like in the diligence piece, it matters in terms of understanding like what could payback periods be, how healthy is
Mm,
this business, and B2B in particular. There's all these diagnostic kind of rules, or like rule of 40 or whatever you want, whatever rules you wish to apply. Like they really do matter. I personally care most about payback period, right? Because that's a good sense for how quickly can I reinvest this marketing spend to acquire the next customer, and it just kind of like it's a good signal for like how capital efficient you think a business could be. But then even once you're like you've done the investment and you're trying to understand, the other thing I think a lot of marketers undervalue is using predictive CLV to actually train the algorithms. Like gone are the days where you've got a bunch of 22-year-olds at an agency bidding up this keyword versus that keyword and adding
sure.
negatives and blah blah blah.
Yeah.
Instead, our jobs are to train algorithms, and the stronger the signal you can give the platforms around the quality of customer, what is the predicted lifetime value, what was AOV, or it's not just a return on ad spend target. It should be a return on lifetime value target with some type of
Yeah.
horizon set. And then even when you get signals later on, like the customer returned the product or something along those lines, we always make sure that we can go back and like kind of do an offline data passback or whatever we can to make sure the platforms know, like, we don't like this customer, just kidding,
Sure. Yeah.
algorithm avoid them going forward kind of stuff, because that's actually hugely valuable. And I think once you've trained the algorithms what you're really hunting for, that's when you can really like unlock some really powerful wins.
Yeah, well, and then it sounds like there's a good amount of maybe martech consulting that is part of this function as well. How are you? I guess what tools are you looking at right now in terms of what brings that data back, or what brands should be using?
Yeah, I think the answer is it depends. It depends on the
Yeah,
brand.
of course.
From an attribution perspective, I'll start with attribution just because
Yeah,
I love to kind of talk about it. But like, design of experiment driven, I'd say like measured and house are pretty good. Media mix modeling, if you're not an enterprise brand with that's using like a new star, one of these call it $600,000 a year options, recast and incremental are pretty cool platforms from what I'm seeing. Still relatively early days. And then I know I'm going to get some flack from this from them, but what I'll call modified MTA or MTA plus MMM, I think Rockerbox, FOSFA, Northbeam are decent in that ecosystem. I'd say like Northbeam's really like better at like how do I optimize Facebook specifically. So Facebook
yeah.
heavy brands tend to go there. And then Triple Whale and Wicked Reports, those are the ones that I think I would say are like better than GA, but are not gonna necessarily solve the full puzzle. But if you're a brand that's digital only channels and relatively short consideration period,
Mm-hmm.
there's certainly a step in the right direction. Um, in terms of actually like how do you instrument the data passbacks and all of that stuff, that's a little bit trickier if you're a Shopify brand. There are plugins. I don't
Sure.
have strong preferences there. And then I would say for otherwise, you're really in this world where I like to have like I always say, if you're using one of the big consultancies, I failed you. I like to have like the small shop, like the 1 to 3 guys with a shingle who will dive in and
Yeah,
help you re-implement GA and then do the data pass back and make sure
yeah.
that regardless of what you're using, because there's a million great tools out there for like the data integration that is just like working in an effective way, and we'll
Mhm.
bring together, we'll bring those partners to our portfolio and help make sure they're optimized.
For sure, and obviously we don't have any sponsors by design, but I'm a big fan of high touch in
Yes.
that portability capacity of being able to bring that data back in. And just a plug for folks who may be listening right now. Some of those platforms that were mentioned, Rockbox, we had Rico Tool on the show a while ago, so back in June you can go listen to that episode. We also had Michael Kaminsky from Recast on the show back in May. So these are all really, really good episodes. If you're listening to this for the first time and you want to go and find out about these platforms, those are really good ones to check out. So I guess, yeah, we sponsor ourselves. That was a sponsor segment. Now, yeah, a word from us about ourselves. Uh, love it.
I
That's
wish
so
I knew
interesting.
the episode numbers off the top of my head. Go check out episode number 13.
Yeah, from
Oh,
season one.
yeah.
Uh, no, this is such interesting stuff. Jim, was there anything else you wanted to dive into?
There's so many like tangential things that are like not related to what we're talking about that I have just like personal interest in, but I'm gonna have to like hold myself back and keep it on topic. So, but yeah, this has been great, super interesting, and I know I love hearing the tools, right? Because you work with, I don't know, dozens of companies,
Mhm.
hundreds of companies, or over the past 5 years,
Yep.
and just seeing like because it's easy to fixate on tools, right? They're the shiny things. They're the
It
things that we
solves every
can
problem you've ever had. Just get the tool.
feel. They're the things that we can like buy or do that we feel like we're doing something. So it's easy
Yeah.
for people to get like, yeah. I mean, people, and it is to a certain extent like it's good to know what are the kind of common tools that are being used that people
Mhm.
recommend. So I know that's always helpful for listeners. So it's good to hear those.
It's great.
Yeah, absolutely. And of course, we do love to take the opportunity to conclude our conversations with the incremental insight. We'll need a jingle for that. We're going to jingle at some point. But Mark, do you have an incremental insight for our listeners today?
I love that you've already like baked in incrementality into the insight. And
Yes.
unfortunately, I would say like in terms of incrementality based on our prior discussion, I would say this falls somewhere around like somewhere between paid search branded and remarketing, and that we talked a little bit about it, but I can't emphasize enough like post-purchase surveys, like, I shouldn't say post-purchase, post-conversion surveys. Launch it and compare the results and monitor it over time. I think it can be hugely valuable in calibrating these models and understanding your business. And it's super easy, it's cost effective. It doesn't require a big tech investment, but can be really invaluable to help calibrate as well as to size the opportunity. And then I'd say the other thing in terms of like just a resource that I've got printed out and it's at my desk and I use it in discussions. It's like recast. If you just Google like recast attribution stack, they've just got a really great visual of all the different tools that can be used to triangulate performance. Back to our earlier point, like there's no one solution here. It's about triangulating across various ones. And I think they can kind of talk about the various methodologies and levels of sophistication within that chart. But I found it hugely valuable in just like helping to have that discussion with others.
Excellent resources.
I know the surveys always get some hate usually because people are like, oh, well, that can't be accurate. It's like back to our conversation around like we've been trained as in the digital marketing age of, everything has to be perfectly accurate and we have the data. And it's like, oh, surveys, that's someone self-reporting. They're not going to be right. They won't remember, whatever. But like if someone tells you that they remembered you from a particular channel, even if that wasn't the thing that drove them, that like caused the conversion, like they remembered it.
Yeah.
So it's important in their minds, right? So
I'd also say like more often than not, surveys, most people deploy surveys in really inefficient ways. Like I now have a template and I really just need to do a blog post on this at some point, but basically it's like, it's not just how did you hear about us, paid search, organic search, whatever. Like I see some of these post-purchase, I'm sure you've seen them too. And they just like, don't think in the mind of the customer. And this came up when we were launching TikTok for one of our brands. And we're like, how are they saying it's TikTok paid ads TikTok influencer when we're only doing paid ads? But the creative that was working was influencer style creative. So we had to start getting a lot more explicit around the follow-up questions. TikTok, okay, was it, an influencer like this with lots of followers, or was it from our handle here? And like the art around how you ask those questions can really influence how you start to, I guess, iterate on the understanding.
I personally believe that all marketers and everyone in the digital analytics space would do very well to go and take a very brief course on survey development methodology. It's something that I studied in school as part of I studied psychology, and obviously there's a lot of stats in there, but one of the things they talk about is survey bias and essentially finding what you want to find based on how you frame the questions. And that is such a critical component. Just it's like we talk about, we got a tool that's going to solve all our problems. We got a survey that's going to solve our problems. You got a survey, but the questions on it don't make any sense, and they are designed to fill out the form exactly as the sales team wanted to see it, or exactly, it's not through the lens of, if I've never heard, if this is my first time here, like how will I actually recall what happened and what interactions I saw, and really to your point, think in the mind of the consumer. So I love that, and we'll have those links in the show notes on the mmmhub.org link, I believe.
Yes, we will. And also, in terms of post-conversion surveys, maybe in light of recent Google Analytics changes, we should call them post-key event surveys.
Yes, that's right. Yes.
I'm sure like at least one of the three people that are still listening probably got that reference. So yes.
I'm going to rage against the Google machine and refuse to do that. Sorry, Google, you're not dictating my vernacular.
So, for what it's worth, I don't hate that. I like it from a measurement practitioner point of view, because I do think that conversions are overutilized, and you get these faux conversion rates that aren't necessarily true. And there is a need to differentiate between just like a page scroll event. That's not a key event. That's just an event. There's something interesting behavioral with that. But there are these events that happen that aren't quite conversions, but they also aren't just your regular events. So there's something there that I think they caught me onto. The challenge is Google Analytics 4, for whatever reason, has decided, people already don't like us because we've changed so much. Why don't we just change the semantics on top of it? Oh, and by the way, let's put a new admin screen in front of everyone. You're like, This is not the way to get people to adopt or to embrace your product. And so if you want to have a GA4 therapy session, check out our episode with Dana DiTomaso that we had a couple weeks back.
A couple of weeks ago. There you go.
Yeah.
And Simon, you know what we always say when Google Analytics 4 and key events get you down, what do you do?
Well, when those get you down, it's time to measure up.
All right. Talk to you next week.